Welcome back to another video talking about money. This video is a precursor to a great number of videos that will do deep dives into different types of bank accounts, savings accounts, cards, and all sorts of other things. So this video is a brief overview, but with some very fundamental and crucial tips about bank accounts, savings accounts, debit and credit cards. So let's get into it. When you open a bank account, obviously you get a primary or current account, and you usually have a savings account that goes along with it. One of the biggest problems that we've seen people have, and when I say we, I'm talking about my law firm and as clients, and we see people coming into difficulties that I've discussed over on Black Belt Barrister. Now, many of those people have had significant problems when they've kept all of their money in their current account and not moved it into the savings account. Now, the savings account should be somewhere you put money that you don't need to spend straight away. So ideally, your current account should only really just have enough money in it to cover your monthly outgoings as against your income. And the simple reason for this is that your debit card is going to be linked to that current account. Now, yes, you can also have a card linked to your savings account, but that's not always the standard depending on who you bank with. And we'll come back to debit cards in a moment. But as I said, many people have their accounts emptied by fraudsters and all sorts of other problems when they've got all of their money sitting in their current account. So the first major tip that I would say about bank accounts is don't keep all of your savings in your current account. Move them into or open and then move them into a savings account. Even if it doesn't have a great rate of interest, it's safer there than it is in your current account linked to a debit card. Now, another word on the type of accounts that you might get. There are lots of different deals about paying a monthly fee for a different type of savings account. Light accounts, 1, 2, 3 accounts, 1 accounts, whatever they call them. And in exchange for a monthly fee, you get a selection of different benefits. Sometimes cashback, sometimes higher interest rates, and sometimes little perks such as insurance. Now, if you calculate any of these things and they are worth it, then obviously it's worth paying that fee. But a lot of people, from my experience, both as a barrister and when I used to do mortgage advice, a lot of people just pay the fee without really knowing what it is. And if they don't know what it is and what it benefits them with, then they won't be availing themselves of those benefits at all. And so it's a lose-lose. They lose the fee and they lose the benefits. If you do the calculations and it's worth it, then that's fine. For example, some of them will have a higher rate of interest on balances up to, say, £20,000, and there's a fee attached to that account. However, unless in most cases you've got £5,000, £10,000 or so or more, then that's not even likely to cover the fee for that account. So obviously paying the fee just because it attracts a higher rate of interest, if the net result is that you lose money, is not really a sensible idea. So my biggest tip for the savings accounts is do all the calculations first if you're offered any premium accounts with a fee attached. But my main tip about bank accounts is don't leave all your savings in the current account because it's attached to the debit card. So now we're moving on to debit versus credit cards. Now, whilst pretty much all banks subscribe to the chargeback scheme, that is reversing a transaction, not all of them do, and it doesn't always work. Now, if you spend money with your debit card, it is an electronic equivalent of spending cash. The significance of this is that the transaction is not covered by Section 75 of the Consumer Credit Act 1974, which does apply to credit cards. So more about that in a moment. Now, that is because Section 75 of the Consumer Credit Act does not apply to overdraft arrangements or general purpose bank loans. So if you take out a standalone bank loan to purchase something, you do not benefit from Section 75 of the Consumer Credit Act because you're spending the money that you've borrowed under a separate arrangement. There isn't a link between the finance and the product. And that is exactly the same with an overdraft. You are borrowing money from the bank under an independent standalone arrangement, being your overdraft facility, and you are then using that money as though it were cash. Now, whilst you still may be able to benefit, as I said, from the chargeback arrangement, this is certainly not as strong or definitive as protection under Section 75 of the Consumer Credit Act. Now, in most cases with a debit card where it is pure fraud, your bank will probably help you. But the big warning there is linked with the bank accounts that I talked about a moment ago, because if someone does get hold of your bank card or they get hold of the details and they have enough to start spending your money, they could, in theory, spend all of your money, all of your savings, leaving you in the lurch until the bank sorts it out, or not, because they may not sort it out for you. All in the meantime, you're left with no money. And there's no guarantee with this chargeback scheme because it's not enshrined in law. It's only something that the banks subscribe to, and it is an interbank exchange of correspondence to determine whether or not they uphold the chargeback at all. And for anyone that wants more information about the loans and everything else that I'm talking about as we go along here, there will be separate videos, so do leave your comments below if you've got other questions about loans or anything else that pertain specifically to a loan or an overdraft or whatever. So as I go through these videos, which are always unscripted, do ask those questions in the comments below and I'll come back to those. So now to credit cards. Now, whilst I don't advise ever, if you can help it, having large balances on a credit card, and if you can't avoid using a credit card, I advise that you pay it off every month to avoid the interest, because that's going to be the most cost effective for you further down the line. What you do get with a credit card on any purchase within certain criterion is protection under Section 75 of the Consumer Credit Act. Now, so long as your purchase is between £100 and £30,000, it doesn't have to be all on the credit card, but the purchase does have to be between those two figures. If you spend any amount of it on the credit card, i.e. the credit is linked to the transaction. So it doesn't work, for example, if you withdraw cash from a cash machine and you pay the additional fee, you get the cash, you then go and buy the thing. There's no direct link between the credit card and the purchase. You need to use the credit card to make the purchase. And then in doing so, what Section 75 does is create a like claim against the finance provider as against the retailer or the trader that sold you the goods or the services. Now, what does that mean? Well, if you buy something, let's say a TV, and it goes wrong, and the trader is flat out refusing to assist you, or you've bought a car on a credit card and the trader is flat out refusing to assist you because it's gone wrong. You're trying to exercise your consumer rights by going back and saying, I reject this, I want my money back. They say no. You then most likely have a claim against the trader. But if you've used the credit card or the finance is directly linked to the purchase, more about that on other videos, then you have a like claim against the credit provider. Meaning you can make the claim against both of them, the trader and the credit card provider. Now, if you think about this logically, the credit card provider will be jointly and severally liable for the same claim as the trader. Now, logically, they have an incentive to make the trader put things right, because the trader will be best placed to put things right because they sold you the TV or the vehicle or whatever it was. And so you would then write to both of them and say, I have a complaint about this product and the trader's ignoring me, so I'm going to sue you as well. In most cases, they will resolve it very quickly, because they don't want the cost, expense, and hassle of going to court to argue over something they have little to no control over, other than the fact that they're involved in the transaction by the pure fact of being involved through a statutory obligation under Section 75 of the Consumer Credit Act. Incidentally, if this wasn't clear, if you make a bank transfer for the same purchase, and even if that includes part of an overdraft, that does not attract Section 75 protection either, because again, that is akin to cash, i.e. withdrawing cash or withdrawing cash from a credit card via a machine, or even sometimes you get those, I haven't seen them for years, but you get those credit card checks where you can literally write a check, but it comes out of your credit card balance. I don't advise these, by the way, but you can pay money from your credit card using a credit card check. Now, that again is like writing a check for cash. and it doesn't attract Section 75 protection. So if anyone was wondering if you can write a check to somebody from your credit card, if anyone ever still uses such a thing, you don't get that protection. So you're paying the fee for the cash and you don't get the protection and you're paying the interest on the credit card. So it's lose, lose, lose. So my suggestion is obviously don't do it. The third type of card that I haven't yet spoken about is the prepay cards. Now, again, prepaid cards, if you think of this logically, it is your money paid onto the card. Therefore, you are spending your own money. It's not a credit arrangement. Therefore, Section 75 doesn't apply. But again, prepaid cards will probably still benefit from the chargeback scheme so long as the bank is participating, which, to be fair, most of them are. Now, there is some information online with which I disagree. So this is me putting on both hats, the money hat and the barrister hat from my Black Belt Barrister channel. So some websites claim that if your product is faulty and it's still under warranty, then you cannot rely on Section 75 to claim under the Consumer Credit Act. But I respectfully disagree with that, with those websites, because Section 75 of the Consumer Credit Act provides that if there is a breach of contract or a misrepresentation, then you have a like claim against the creditor as against the supplier. Now, this doesn't say so long as it's no longer in warranty or anything like that. If it did say that in the Act, then of course you wouldn't be able to rely on it. But that's not what it says. It simply says, in relation to a transaction that is financed by the agreement, so the finance is linked to the purchase, any claim against the supplier in respect of misrepresentation or breach of contract, he shall have a like claim against the creditor, who with the supplier shall accordingly be jointly and severally liable. So both the trader and the finance provider are liable to the same extent, independently of each other and together. So they both bear the same burden, either together or separately, for the full amount of the purchase, so long as it is between £100 and £30,000. As I said, some very official websites, which I won't name, state the opposite. They say if it's under warranty, then you can't make a claim under Section 75. Now, whilst it might be best advice, now I'm going off track here a little bit, but whilst it might be best advice to use the warranty to get it repaired or replaced, that isn't strictly not correct. You can still make a claim if you so choose. If they are forcing you down a lengthy warranty repair procedure, then that doesn't really fit. But more detail on that probably over on Black Belt Barrister, so that's always linked in the description below. So it's for those reasons I would always make the purchases using a credit card, ensuring that the credit purchase is directly linked to the trader when making that purchase. If there's no direct link, you cannot rely on the protection from that card. But working backwards in this video, if you use the debit card, you don't get that protection. If you use cash, you don't get that protection. If you use a loan with the bank and then you transfer the money to the trader, you don't get that protection. And so, as I said, each of these facilities, from the savings account, the bank account, the debit card and the credit card and the prepaid cards, are all used for different reasons. For example, a prepaid card you might only use if you want to cap the amount that you could potentially lose if you lose the card. And obviously it's only up to and including the amount that you've prepaid that card with. And even then you'll still get the benefit of the chargeback scheme, but not Section 75 claims. Now, finally, the one type of account that I haven't mentioned is an ISA. What is an ISA? Very briefly, and much more on this in other videos, I can assure you, is an individual savings account. Why would you be interested in an ISA? Because the interest or the income or the capital gains that you earn in an ISA by storing your money there is tax-free, whereas in an ordinary savings account, it's not. And ordinary savings accounts have got different rates of interest, but as I say, more on each of those in separate videos. Let me know in the comments which one you want to prioritize first. I have lots to talk about, lots of different accounts. I will go through real time what I think about each account and all sorts of things in different videos. So if you like the idea of that, do let me know in the comments which one you want to hear about first, and I will talk about each of those, what we do, what we actually do in different bank accounts, different savings accounts, different ISA accounts, and of course, different stocks and investments and all sorts of other stuff. And so hopefully that provides you a good overview of those accounts, the cards, which one to use and when not to use them. Any questions, any further follow-ups, leave them in the comments below. I look forward to reading those. And as always, thank you for watching. I'm really glad you're on this new channel, and I'll see you next time.